What Bitcoin solves for me is the distribution of wealth problem. Now that's a big statement. That is the major problem in the world. The purest AI trade is the only thing that AI can't destroy. The only thing it can't destroy is Bitcoin, in my opinion. I think liquidity becomes a very important thing when agents are making decisions rather than banks. And that's the one part about Bitcoin. It's a very deep liquid asset that trades 24 hours a day. There's nothing else like it on the planet. Liquidity will become a much higher valuable thing as we move forward.
Bitcoin just lost half its value from the all-time high, and one top strategist says that crash is proof AI can never kill it. Let's start with the numbers. Bitcoin is down around 25% since the start of this year. It's trading more than 50% below its record high of roughly $126,000, set in October 2025. It even touched lows of just $57,717 recently. Scary chart, right? But strategist Jordi Visser looks at that same chart and sees opportunity. He calls Bitcoin the purest AI investment out there, the one asset artificial intelligence literally cannot destroy. He believes AI will make Bitcoin more important, not less. Think about it like this. Every other asset can be copied, automated, or outcompeted by AI. Bitcoin can't be. For Visser, it solves something humans have struggled with forever. Money you can trust, that no one can secretly print more of. Here's where it gets interesting. Visser thinks AI will pour money into Bitcoin by making old assets less competitive. AI needs massive energy infrastructure. It's concentrating on corporate wealth into scarce assets. And AI agents making their own decisions need a secure digital store of value. Bitcoin fits that role perfectly. As AI starts replacing banks with financial decisions, liquidity becomes everything. Bitcoin trades 24 hours a day, every single day. It's one of the deepest, most liquid assets on the planet. That's why Visser expects its collateral value to keep climbing. Bitcoin is already the biggest digital asset out there, yet most of it just sits unused. Before 2020, it was all retail hype and having cycles. Now, institutions and ETFs are wiring it straight into the global financial system. If you're new here, welcome. We're a small but growing channel, and we're on a mission to hit 1,000 subscribers.
What Bitcoin solves for me is the distribution of wealth problem. Now that's a big statement. That is the major problem in the world, but that goes back to my time in Brazil where I could see people so poor. But how could it possibly, it took me time to understand, but the democratization of access to assets, the democratization of access to the benefits that come from innovation. Because right now it's in the hands of people that publicly say, and I remember the first tech individual who said this, I have so much money, I couldn't spend it if I lived for 1,000,000 years. So when you get into the point, there's two ways for that to happen. They can keep handing it down to their kids, and that ends up filtering into Bitcoin because they have different beliefs. But the other way it happens is what AI does is it destroys value. It destroys moats. It allows for instant competition of anything, which is always at the end the law that has dominated capitalism in the distribution of wealth, which is scarcity. The value of any asset is based on its scarcity. And so for Bitcoin, when I heard about scarcity and I thought about the fact that, well, what's the value of real estate if AI gets us to a point where the cost of building a house is zero? What is the value of a home? What is the value of real estate if humanoids are building it? I could go down so many different paths. How do you know that a Picasso is a Picasso if you have 1,000,000 Picassos that all look exactly the same? And if they were tested by anybody, the only thing you have is a piece of paper, which, unless it's on the blockchain, can be doctored as well. So every single thing for me became, oh my God, that's what technology is. We solved for money. And if you go back to what the money problem was, we couldn't get to the point where it was immutable. We couldn't get to the point where we could solve that what you had was real. And so that's where I go. It's the problem of the distribution of wealth that it actually solves, and it makes the world a different place when we get into abundance. The market is going to now evolve with speed of AI and consumer agents, where liquidity is going to be valued at a much higher level than it used to be. And so things that are liquid will get a much higher haircut on collateral. And that's where Bitcoin becomes the collateral of the system. And if all of a sudden it has a better collateral, think treasuries in the US, well, then there's value to holding them because you can people will lend against them because they're liquid. If you can't borrow against a real estate the same way you could, or there's a haircut because its bid offer spread is not the same as Bitcoin. I think liquidity becomes a very important thing when agents are making decisions rather than banks. And that's the one part about Bitcoin. It's a very deep liquid asset that trades 24 hours a day. There's nothing else like it on the planet. Liquidity will become a much higher valuable thing as we move forward. People that try to separate Bitcoin from crypto are making a mistake. People that are trying to say, well, Bitcoin is a scam on the TradFi side. And I'm like, well, Bitcoin is the sum of the ecosystem right now of crypto, but eventually it will be the sum of the ecosystem of tokens, and all things will be tokens. So Bitcoin becomes the sum of every asset that you have in some framework. And at the end of the day, that's really what the S&P 500 is. You ask anyone that invested in 2010, their biggest mistake was not investing in the S&P 500. If you invested in venture, if you invested in all, and you add up the 15 years, almost nothing is beating the S&P 500. Nothing is beating the NASDAQ. So you may have for 3 months, for 6 years, for 9 years, but once you got to 2022, all of these things have kind of worked out that no assets are actually beating not only Bitcoin, but they weren't beating the S&P 500. They certainly weren't beating the NASDAQ. And I think over time, you'll see the NASDAQ and S&P start to give up the ghost to Bitcoin. And that has been the moment that I thought would be the acceleratory point, is once AI gets there. And that's why I say the purest AI trade is the only thing that AI can't destroy. The only thing it can't destroy is Bitcoin, in my opinion.
While AI stocks have been swinging wildly, Bitcoin has quietly become one of the calmest assets in the market, and almost nobody's talking about it. Here's what's surprising. While many AI-related stocks went through extreme volatility after huge rallies, Bitcoin's volatility has dropped lower than many investors expected. According to Jordi Visser, the market now views Bitcoin as a more mature, stable asset than it used to be. Think about that for a second. Bitcoin's volatility has fallen below that of major AI stocks like Nvidia and Tesla. While crypto markets matured and settled into steadier price swings, those high-flying AI equities kept experiencing sharp surges and pullbacks, driven by rapid growth expectations and pure tech sector hype. Visser admits there's one thing he underestimated over the past year and a half: how well Bitcoin held up despite several major sell-the-news events. He points to two big ones. First, the launch of the Bitcoin ETFs. Second, the election of a U.S. president with a pro-crypto stance. Many expected both events to trigger even stronger price gains, and Bitcoin still came out strong regardless. Visser also says the political shift toward digital assets has been remarkable. Back in 2022, he never imagined that influential policymakers would one day publicly describe digital assets as the future. Yet here we are. Let's get back to the interview.
The TradFi component that I probably underestimated in the last, I want to say, year and a half, because last year I was shocked at how well Bitcoin had traded in kind of the 6 months leading into when we got up to 120. And the reason was we had two sell the news events in Bitcoin. We had the ETF launch, and then we had something unthinkable to me, which I'm sure nobody really truly thought. Maybe someone in one of the super PACs, but the fact that the U.S. government had a president elected on a crypto positive stance was shocking to me. The fact that I read a paper with Scott Besson, at the New York Economic Club 6 weeks ago, that basically talked about the future is the digital assets, the future, like, to think that we'd be at a point where someone I know very well, and Scott Besson, and someone who's been in the industry a long time, would say this. I would not have thought that would happen in 2022, as of 2022. The reason that's important is if you take those two events, Bitcoin is basically back to where it was or just above when the ETF launch happened, or at least in the very time after. That was a sell the news event. The Trump presidency, the meme coin, that was a sell the news event. And somehow it's been able to go sideways during this period. If this was a stock like Apple or Google, there were plenty of times where Apple was unchanged for 2 years. So this 4-year cycle thing, to me, I view it very differently, which is I look at it as how much was run into it. Where's the money coming from? We all know it has to come from the fiat system. So this is the most positive thing I can say to you today for everyone paying attention. When I say AI is going to dominate things, the easiest part of the AI trade is over officially. It's over. And I said that in May of this year when I started doing my videos on the AI mid-cycle slowdown. The mid-cycle slowdown in AI was all about the second derivative. When you hit the second derivative of new news, when all of a sudden people realize that memory is something we need forever, as they did with Micron, SK Hynix, and Samsung. I was buying Micron at 60 to 100 all last year going, how are you guys missing this? I haven't had a 20 bagger in my career. I didn't ride it all the way to a 20 bagger, but I ran it to a 10 bagger. And the thing is, it's over. Like if someone said, now you still believe in memory. Yeah, but we just went from 60 to 1200. We've pulled back to 850. If we're lucky, we'll get to 5,000. That's now over the next 5 years, 6 years. We're not doing another one. So we've hit the second derivative. With Bitcoin, that's not the case. The AI trade, the volatility right now on a 60-day rolling basis is 100. That's where we are. 60 days, 100. Bitcoin, 30. We have taken an asset which everyone thought was too volatile. We've put people into a trade where they rode something from 100, say, to 1,200 and now back to 800. That is like Bitcoin, that they are adjusting the way that they have to make money in AI to speed and these parabolas. Parabolas, these hockey stick charts, are what crypto is built on. Well, now it's happening in the public markets for what you have to do to invest in. It's over, though. From this point, the enterprises are now entering a new field. You never again get the chance to buy a bunch of infrastructure companies where they're getting trillions of dollars from the hyperscalers. From this point on, this is not about that. They've built in that next 3 years that we talked about. It's not going to be unfinanced, but no company is going to get revenues growing big enough because the enterprises can't do that. We already have 30 multiples on a lot of big ones. So what will happen is it's going to get boring in AI. It's going to be 20% a year in the S&P 500. That's not sexy enough for people. They need to find some beta. And that beta doesn't exist from healthcare companies like insurance companies knocking off 5% of their expenses and then getting a 20% earnings growth because of the leverage that comes on reducing your expenses. So we're actually entering the boring part, which is the productivity part. The exciting part is the build out part. And the only thing left in the build out is the financial guardrails to deal with the AI agents. That is the next trade. And I believe fully by the time we get into a year from now, if we have an anniversary 1 year of this and you and I get to do this again, consumer agents will be the story and the amount of transactions that will be happening will be enormous.
Bitcoin continues to prove why it remains one of the most watched assets in the world, holding strong through major market events and changing investor expectations. As AI transforms industries and creates new opportunities, Bitcoin's role in liquidity, digital finance, and future technology could become even more important. The next phase may belong to those who understand how Bitcoin, AI, and innovation are reshaping the global economy. Does Bitcoin's calmer behavior make it more trustworthy to you or less exciting? Let us know in the comments. If you enjoyed this analysis, hit the like button, subscribe to the channel, and turn on notifications so you can never miss any of our new updates.